It's Lynette with ITM Trading, the Chief Market Analyst. Been really interesting. You might recall that the last time we talked about the demonetization of the two largest bills in India, and that's created a lot of chaos. So on the 11th, which I think was yesterday or 2 days ago, Venezuela has now demonetized their largest bill, which was the equivalent of 2 cents in terms of US dollars. But it is a big chunk of the currency in circulation. Now, they had 72 hours notice that that bill would no longer be good. In India, they had 4 hours notice. So Venezuelans, in trying to preserve their principal, were trying to go across the border to convert the bolivars that are about to be no good. And what did they do? They closed the borders. You need to understand that this appears to be a growing trend because Australia, now how many people don't know about Australia, but Australia is also now discussing demonetizing their $100 bill. And that comes from the Ministry of Finance. Now, interesting, with a little bit of research, I went into the Reserve Bank of Australia. You can see that the $100 bill is more in circulation than any of the other bills. And you can also see how it's been growing. So as the markets have been really illogical, people have been flying to safety. They trust the cash. But you can also see that there is not a whole lot of notice that's being given when the government chooses to declare that it is no longer money, whatever bill it is that they're talking about. So we'll keep our eye on Australia, but it looks pretty good. And also Citibank has already, about a month ago, they'll still take deposits. So you could get cash into your Citibank account, but you cannot get cash out. So all of this is really about pushing us to cashless. The banks love it because that means every single transaction they get to fee you. The governments love it because all of those bills that don't come back is like a boon to the governments. That's now debt that is simply written off. And they give you a very short period of time to convert it into anything else. And they put limitations on how much you can convert. So these are absolutely forms, in my opinion, of wealth confiscation. Now, we've talked about only having 50s, 20s, 10s in our currency. This is, according to the Federal Reserve, the amount of currency in circulation, and these are the hundreds. So you can see that there's a whole lot more hundreds than there are 50s or 20s or any of the smaller bills. So you do need cash. That is your first line of defense. It needs to be out of the banking system, but no hundreds, because I do believe that this will be demonetized as well. Okay, so there's lots more on that, but I have 5 minutes, so I'm going to keep going. Now, you guys have also probably heard about the Dow nearing 20,000, but I'd like you to notice this is a 1-year chart on the Dow. And I would like you to notice the trading volume, which of course you're going to hear about how great trading volume is. It's declining. So when a market goes up on declining volume, that is an indication of manipulation. So who's buying the stocks? Not the insiders. Okay? These are all being managed with futures contracts. This particular graph, and anybody that's had me do an analysis of their holdings and had some individual holdings would have seen this in a different way. But the insiders are selling. That's what that's showing you. While the Dow is rising. This is risk transfer. Because what do people look at? What do you look at? You look at the Dow going up and go, oh, I don't want to miss those gains. What do these insiders, these are CEOs, CFOs, boards of directors, the guys at the top of the company, and what do they know that you don't? And by the way, here's Venezuela. I'm going back. Look at their stock market. It raged up, and that's what no liquidity looks like. Make no mistake, in my opinion, and also with lots of historic precedents, that's where we're heading. And real briefly, real short, I want to show you what's going on in the gold market because it too is really interesting. This is the spot market, Wall Street's manipulated market. These are the holdings. So again, just like the other chart didn't make any sense, declining volume indicates manipulation. When demand exceeds supply, prices in a free market go up, which is not what happens in the gold market. But that's because of lots of manipulation. Now, this is just talking about silver. If you want to see it in gold, Deutsche Bank was also listed in rigging the gold price. Now, I talked about this a while ago, but for some reason it's making it onto Bloomberg now. Make no mistake, UBS is part of it, Barclays is part of it. Lots and lots of banks are now admitting or being called upon to admit to rigging both the gold and silver markets. And that makes a whole lot of sense because you remember this chart, which are claims against gold in the futures market. There are, this last one, 535 owners for every ounce of gold available for delivery. How easy is it to manipulate the price when you don't have to have the physical gold? Very easy and very, very cheap. This is the futures market, the CME group. And you can see these are the physical markets down here. Oil, silver, and gold. It costs Chase Bank $1.45 to control 100 ounces of physical gold. It costs central banks and their minions $1.10. And that's true for gold, silver, and oil. Those are all physical markets that are being manipulated and controlled by paper-only markets super cheap. So I hope I haven't run over 5 minutes or too long, but that's it for today for our Flash in 5. Make sure you like us on Facebook, subscribe so you get notices about us, and give us a call if you have any questions. 888-OWN-GOLD. 888-OWN-GOLD. Is there anything else I was supposed to say, guys? Okay, then we're out for today. We'll see you on Friday. Have a good one. Bye.